For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place. Welcome to the Simple Side.
All right, welcome to the only investing newsletter that will let you check off Grow My Portfolio from your New Year's resolutions. Good morning, shareholders. It is Saturday, January 4th, and before we get into today's newsletter, I want to run through some quick updates. Our daily stock newsletter has finally surpassed 10,000 subscribers, so if you haven't joined and you want to get daily stock market news and even a little bit of stock market pickage, go and check that out. There's a link in the newsletter, or you can look us up at thesimplesidedaily.substack.com and you can find our daily newsletter there. Also, I want to keep everybody updated on our copy trading. Our copy trading partner is going to be announced before the end of this month, so be on the lookout for that. And I'm hoping to have copy trading workflows for you guys to sign up on brokerages and all of that built out before the end of the month as well, hopefully within the next couple of weeks. Also, our letter to investors for 2024 was a huge hit, and that of course came out this past Wednesday. And that post will be pinned at the top of our website, thesimpleside.substack.com. So go and check that out. You can find that newsletter there. Go read through it. Go see what we're going to be about for 2025 and decide if you're going to join us on this journey. And if you need a little bit more convincing, I just want to remind you that our flagship portfolio has been around since 2020, and the picks that we've had have returned over 280% in that same time frame. So that's about 5 years and 280% returns, which of course is absolutely crushing the market. And if you go and read that investor update that I sent out for the beginning of 2025, you'll be able to go and see that, make your own decisions from there. I also want to remind everybody that if you are a paying subscriber, you have access to a sheet that I've put together with all of our 2025 picks on it. And I actually put those on there yesterday. So if you were sneaking around, you've seen those on the sheet. When you request access, please let me know the email address that holds the paying subscription to our newsletter. That way I can add you faster. I have to kind of double check everything and make sure that I don't have a bunch of free subscribers going in and trying to join the sheet. So I make sure all of that is proper. And I've got a little example of what we've got showing up on the sheet for our 2025 stocks. So go and check that out as well. But without any further ado, let's talk about the weekly trades that we sent out last Saturday. Now, for those of you that don't know, the Simple Side actually offers 3 different types of portfolios and 3 different, I guess you could call it, time frames. We have a long-term, that's our flagship fund that I've been talking about recently, and that's what's being released today. We also have a midterm portfolio, and that's not really released. It's, more or less stocks that are picked throughout the year that I think are going to perform well. Again, I talk about this in the 2025 letter to investors, so go and check that out. And then we have our short term, also known as weekly trades. So if you've got a little bit extra money around, if you enjoy the stock market, if you like paying attention to it, that's kind of what this is for. But we also have been beating the market. So let's talk about it. We've been doing these weekly picks for 24 weeks now. And over that 24-week period, the SPY has returned 5.73%. And over the same 24 weeks, the Simple Side picks have returned 17.63%. That means that annually, the SPY would be returning 12.42%, and the Simple Side will be returning 38.19%. So that is just something that we've been doing, like I said, for the past 24 weeks. This isn't kind of our main selling point, but it is really enjoyable. It gets you just in the market. It gets you up to date with news, and that's why we like to do it. You can go and see all of the stocks that we bought last week by looking at last week's newsletter, but I also have a quick summary for you right here. Of course, it shows that we've returned 1.24% this week. in comparison to the SPY's 0.69% return. And paying subscribers get access to all of these picks every week, and it's summarized for them and put together nicely. And I have max returns and take profits and all that good stuff. So go pay it and go and check that out. Now let's talk about what I report on for free every week for everybody to look through, and that is politician trading, insider trading. And today I just added a market indicator section. So we're going to be testing this out. I'm going to play around with what exactly I want to go on in that market indicator section, but it should be valuable, and I want it to be valuable. And if you want to see something in there, if you think I'm missing something, email me thesimplesidenews@gmail.com or DM me on Substack, and I will get things updated and added in there. I want everything to be as valuable as possible for all of my subscribers. Of course, paying subscribers get access to next week's buy opportunities. Today, they also get those take profit percentages. They also get mergers and acquisitions news. They get top investment ideas. They get those portfolio updates, just like our 2025 flagship fund release. They also get to look at microcap picks for the week and then expected stock movements based on options trading. And of course, there's option plays that you can make there. All right, let's talk about politician trading. So we track two ETFs, NANC and KRUZ, Democrat and Republican tracking ETFs. Those are both up this week. NANC is up 1.19%. KRUZ is up 1.31%. Over the past month, they're both down around 3%, 3.3 for the Democrat tracking and 3.96 for the Republican tracking. But year to date, which of course is only 3 days that we're into 2025, they are both up, with Nance up 0.43% and Cruz up 1.17%. Now, we had a record-breaking month in terms of politician tracking. We had 204 politicians making over 35,000, not 3,500, 35,000 trades, and they moved $2.16 billion. That's right, $2.16 billion. My assumption is that since we're coming to the end of the year, we had people that were, probably trying to work things in with taxes, getting some tax breaks by selling things that were down, and all that good stuff. And so that 2.16 billion number is ridiculous. Last week, I think it was 100,000 in total transaction volume. So that 2.16 billion is crazy. And something really interesting is that the largest buyer from this past month was also the largest seller. Can you believe that? He did two things. Number one, he bought shares in European tracking ETFs. And number two, he got rid of nearly every individual holding that he had within the US. How interesting is that? And the politician is Mark Wayne Mullen, a Republican senator out of Oklahoma. Now, this is interesting because it's in direct correlation with all of the market overvaluation that I'm going to talk about later in that market indicator section. So keep listening to get access to that. Again, go to thesimpleside.substack.com and you can go and see the top 5 most recent trades. I put a little infographic of those every single week in the newsletter, so go and check that out. All right, let's talk about insider trading now. This part of our newsletter talks about the 5 largest insider buys from the past week and an ETF that I track. Ticker symbol SURE, SURE. That is up 1.6% this week, down 5% this past month. And year to date, which is of course, again, 3 days, it's up 0.69%. Now, something else that I look at for insider trading is the buy-sell ratio that insiders have had. And this is just the most active stocks over the past 60 days. So what I do is I look at how many insiders have sold those stocks, how many insiders have bought those stocks, and then we do a quick just ratio of buys to sells. And that ratio has been under 1 for 3-4 weeks in a row now. It's sitting at 0.24. And again, this is another market sell signal. So we've got politicians making crazy sells. We've got insiders making crazy sells. But I do have a cool stock that I want to highlight for these insider trades. I'm sure if you're a follower of the market, you've heard about Buffett's picks. Everybody loves to talk about them. I know it's terrible. I do it as well. But this pick that he made recently, VRSN, my models point to that being undervalued by 13.63%, which is pretty good. But that's not really what catches my eye. What really catches my eye is the difference between the ROIC, return on invested capital, and the WACC, the WACC, or the weighted average cost of capital. I've stated this before, but I'll do it again just for new subscribers in case you don't know. But when a company has a good return on invested capital, that ROIC, then that company should basically try to acquire as much capital as possible to invest with it because their returns are high. But borrowing that money, of course, comes with a cost. This is your WACC, your weighted average cost of capital. And when the cost for you to bring in more money is less than the return that you're going to make on that money. So for example, if I were to pick up a loan at 4% interest, but I could invest it in bonds at a 5% return, then I would be making that 1% differential. Well, in this case, VRSN makes a 46% return on invested capital, and it only costs them 9.9% to obtain that capital. So there is a huge differential there. Basically a 36%, I mean, I don't know if you would want to call it a no loss return, but basically a 36% return that they're looking at there, just based on the difference between them getting capital and what they can make investing that capital. And so for that reason, I had to put VRSN on my buy list. Of course, paying subscribers will have access to the entire buy list. Free subscribers, you now know. For me this week, VRSN is going to be a buy. And again, at thesimpleside.substack.com, you can see a little infographic of the 5 biggest trades from this past week. All right, let's talk about the fun part here. Let's talk about market indicators. And real quick, I just want to rant about something that's been driving me crazy. Every year, just like clockwork, news articles start popping up everywhere predicting how the market will perform in 2025 and their supposed quote-unquote top picks. You'll see tons of articles with top 10 stocks for 2025, top 10 AI stocks for 2025. But interestingly, if you go and read through these articles, none of the articles base their analysis or conclusions on fact. None of it is based on fact, unless you consider analysts saying that AI is going to perform well in 2025 fact. I've read every assumption from profits will grow to analysts are calling for a second wind in the AI trade. Again, nothing is backed by facts other than, yes, analysts probably did call for a second wind of the AI trade, but again, all these articles have done no research as to why. And they don't tell it to you either. So don't get me wrong, I think it's completely normal to shuffle portfolios at year's end and start the year with making certain picks. However, anyone claiming to have the secret sauce, the top 10 best picks, or they know how the market's going to perform in 2025, especially when they never show you their past performance, is full of, well, they don't know what they're talking about. So let's talk about what I see as the current market valuation based off of fact. And what I'm seeing is a significantly overvalued market. And we know this to be true based on historical comparison, which is looked at as total market cap of the stock market divided by, or the S&P 500, divided by GDP. And that currently sits at a value of 203%. So basically the total market cap of the stock market is 203% higher than GDP right now. And this is just unsustainable for long periods of time. I made a prediction back in 2024. I guess not a prediction, more again, like this educated guess where I was like, we're probably going to have a good 3 to 5 years. And so now we're down to about 2 to 4 years of, pretty good returns or mediocre returns. And then some point in that time frame, things are probably going to start to get shaky. And that's what all this is pointing to. I mean, a fairly valued market is 109% to 133% total market cap divided by GDP, and we're double that at 203%. And that's not the only ratio that shows the market is entirely overvalued. Historical multiples of price to equity, price to sales, price to book ratios all tell the same story. And in fact, when you adjust for past and future growth predictions, the market looks like it's going to be 20.5% overvalued for 2025. Now, just like I said, I don't expect there to be a reversion in the near term, 2 to 4 years, but there's a chance. And I'm not sure. I dropped my crystal ball off at the cleaner, so I can't quite predict when. But I'm going to be increasingly watchful and risk off as we climb further and further into this overvalued territory. I think there's a lot of dumb money, quote unquote, fueling the markets, and that's not going to last forever. And I just want my subscribers to know that the simple side, we want it to be around for decades, and we want you guys to be around in the markets for decades, not just years, not just months, decades. And that may mean that we're going to hold a bit more cash for these next couple of years and possibly lose out on some returns. But I believe in the long run, it's going to be worth it. We're not looking for hot success, but we're looking for long-term outperformance. And so far, that strategy has been working for us. All right, if you're a free subscriber, this is where everything starts to get awful because you get blocked by the paywall. But you can join the simple side and you can get access to everything that paying subscribers get access to. And for your sake, I'll go ahead and let you know a couple of things that you're missing out on. One of the things you're missing out on are the buys that we have for this week. Let me just run you through what one of these looks like. So we have ticker symbol VRSN that I talked about earlier in that insider trading section. Well, what I show paying subscribers is an expected max weekly return, and that's set at 1.2% for this week. So what we do is, if that stock hits 1.2%, we don't immediately sell. We set a stop loss order at that gain of 1.2%. We set a stop loss. And so if the stock continues up higher, we don't do anything. But if the stock drops back down and hits that 1.2%, we just sell it there. And we're happy with those returns. That's what we're expecting to be the max return for this week. And again, if you extrapolate that out, if you can hit 1.2% every week, you end up with 52% returns in a year. And is that reasonable for one stock? No. But if you're able to hit it most of the time, you can get to 30% or 20% or 15%. And so that's what we're looking for here. And then, of course, I let people know the key drivers. For VRSN, that's strong profitability with a PE ratio of 23.91. A robust operating margin of 68.12%, great analyst sentiment, an outperform rating with a 6.82% upside and improving momentum in the RSI at 68.02. So that's some of the things that we give paying subscribers. We also give them mergers and acquisitions news. For example, one of the headlines this week is WISA, that's the ticker symbol WISA Technologies, which is working on an agreement to acquire CompuSystems. And I've done a lot of research into what moves stocks the most, and it turns out that M&A news is one of the largest movers for the market. So that's one of the news stories that they get, and then I give them a summary of what's going on in the news article and how it's going to affect the stock, and all that is included in there as well. Then we get into top investment ideas. And what I do here is I look at stocks that are, have great operating margins, they're in good standing financially, they have high profitability, they've got good earnings per share growth over 5 years, they've got good revenue per share growth over 5 years. And then I look for ones that have lower volatility but are currently undervalued. And we try to capitalize on other investors finding the same thing, and we just try to hit it a little bit earlier. So we've got 3 picks every week that we give to paying subscribers in there. And then we get into the good stuff, which is our 2025 Flagship Fund stock update. This has been long awaited. I've been teasing this and talking about this for the entirety of December. And as a reminder, I just want to let you know that we're maybe 1 to 2 weeks away from introducing that copy trading, which is going to let you just one-click copy our portfolios. And I've got a lot of great things planned for that, including building multiple portfolios that you can all invest in. That includes this portfolio called Drill Baby Drill that's focused on oil. We've got a health and wellness portfolio that's focused on stocks that are selling drugs for health and wellness, companies that promote clothes for health and wellness, companies that do healthy and wellness food, I guess you could say. Then I've got a whale picks portfolio that I'm building for you guys. This is market whales like Buffett and Soros, what they're buying, how often they're buying it, when they're buying it. And then I've got an ETF and mutual fund buy portfolio. And this takes every time an ETF or a mutual fund buys a stock by over 5%, we go ahead and track that. We add it to the portfolio and we build that portfolio up. And so all these are going to be built for you guys. And I think it's all going to be worthwhile and enjoyable. So go and check that out. I'm excited to send that out and get that copy trading going. And so, like I said, 1 to 2 weeks, and that should be ready to go. I will see you next week. Thank you so much for joining us here on The Simple Side.